Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Certainly June has been a pretty rough month for US equities and bond markets. Equity markets haven't seen anything like this really since the sort of 1930s. And for the bond market, it's really sort of over 150 odd years since you've seen any activity like this. So bonds really have struggled, really trying to take into sort of consideration what the Fed sort of means, and how many more rate hikes are coming through this year. Though it is still quite interesting that the 10-year, the sort of key benchmark interest rate for the US, is still trading around that sort of 320 level. Which sort of implies at present that the sort of interest rate curve has priced in pretty much everything they want to see this year, and it's just going to be very interesting now if the Fed do overshoot that in the latter part of 2022. And certainly coming up to earnings season, it's going to be very interesting to see how that sort of plays out. Certainly a lot of the sort of guidance has been sort of marked down from last time, and it's just going to be interesting to see how they come out now with the earnings, but also as well their guidance going forward. And while at present you've still got a pretty robust US economy, it's just going to be interesting because many sort of analysts are sort of pointing towards potential recession. Is that likely? Indeed, some even argue that the US is currently in recession. Now, against this backdrop, obviously, you've still got COVID, you've still got the ongoing Russia-Ukraine war. And then as well, potentially, you've got a little bit further sort of civil unrest after the US Supreme Court came out and overturned Roe v. Wade. Quite interesting as well, sort of Russia and President Putin just become sort of more belligerent and just really sort of bullying their way left, right and centre. You had a further sort of strike in Ukraine, sort of reaching well into the sort of country now, sort of 80 miles past the sort of fighting front as the G7 countries met. And the strange sort of irony as well that the Russian currency, the ruble now, is at one of its strongest levels for the last sort of 3 to 4 years. So strong, the Russian central bank has even managed to cut interest rates. And that is despite the ongoing sanctions placed on Russia from the West. Now, oil had started to trade back towards that sort of $100 a barrel, but that's now come back to around sort of 110 per barrel. Quite interesting in the UK because Boris Johnson in a latest sort of interview has indicated that he still intends to be in power well into the sort of 2030s. Which is really quite interesting given the sort of divide within his own sort of Tory party, but also as well with the public. Because at present, if there was an election to be held in the UK tomorrow, the Tories would suffer some pretty substantial losses. And against that sort of backdrop, you still got, rampant inflation in the UK, pushing above sort of 9%, and potentially the Bank of England now say it could peak at around 11%. So that will be double-digit inflation, something we haven't seen in the UK since really the 1970s. In the Eurozone, sort of all eyes really on the sort of NATO meeting, on the G7 meetings that have just taken place in Germany and France. But really it's sort of quite interesting still because, President Macron is still struggling to form a majority government in France. You've also got, potentially sort of climate change and heat waves sort of taking place with some pretty big forest fires out there in Spain and Germany. Add to that as well COVID, and certainly all the restrictions have been sort of removed. So COVID is still sort of floating and sort of spreading through the communities pretty rapidly. But I suppose more importantly, the Eurozone is just learning to live with it and move on. And certainly as we head into the sort of summer months, they'll be hoping that, there's plenty of tourists out there spending sort of euros and helping the Eurozone economy to sort of push on. Although obviously what will be very interesting to see if the ECB do actually increase interest rates at the July meeting. Because certainly they appear to be well behind the curve at present. Now in Australia, really very little change so far with the new government coming through. I know it's still sort of early doors, but at present there seems to be very little change in sort of policies out there. It's going to be interesting to see with the Reserve Bank meeting early July to see if they increase interest rates again. Cash rate currently 0.85, potentially they put that up by another 40 to 50 basis points. But at present, the Australian economy is pretty robust, sort of pushing on at a pretty reasonable rate. You've still got reasonable demand coming out there for sort of minerals and resources, and that's obviously helping the Australian economy. And potentially as well, there appears to be a little bit of a thawing in relationships between Australia and China. Now here in New Zealand, we've got sort of, near record low consumer confidence. You've got falling house prices. You've got a Reserve Bank that, is really trying to clamp down on inflation. Although it's only running at sort of, low sort of sixes, it's still pretty high, and we still expect a further interest rate rise at the next meeting. Indeed, the consumer confidence is at its lowest level since 1988. But against that backdrop, the Finance Minister, Grant Robertson, still thinks the New Zealand economy is pretty robust and, is resilient. So I guess it'll be pretty interesting to see the next round of figures on the GDP after that March quarter that showed a negative 0.2, because certainly if you see another negative quarter, that will be a recession. And as yet, certainly with the opening up of the international borders, we haven't really seen a huge inflow of sort of tourists. The ski fields are looking pretty reasonable for their sort of bookings, but most of those are sort of from Australia. And in terms of travelers outside of Australia coming to New Zealand, it's still pretty sparse. So it's still pretty tough out there for income investors, although bond rates and interest rates have risen a little bit on the savings side. It's still pretty tough going. But if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We'll look forward to speaking to you soon.